Hello friends, I am Abhishek Dhoni from Knowledge Gem and today we are back with another video on our channel. So let's get started. The topic of today's video is the new monetary policy released by RBI. See, the repo rate according to this new monetary policy will be 5.4%, which was to the order of 6.5% in the year 2018 in December. According to this monetary policy, it is also predicted that the GDP will be of the tune 6.9%, and the monetary policy which was released in June predicted that it would be 7%. So there is a reduction in the gross development product according to this new monetary policy. Now let us talk about what a monetary policy is. Monetary policy is basically a process by which RBI decides the supply of money in the market. It basically has three objectives, mainly the control on inflation, second one being the stability in prices, and the third one being the steady economic development rate. And it also ensures the production of jobs in the market. See, now let us talk about the stances of RBI. RBI has basically two stances, namely the soft stance and the hard stance. Let us talk about the soft stance. What happens basically in the soft stance that the RBI decreases its repo rate. Repo rate is also known as the repurchase rate. What repo rate basically is, repo rate is the interest rate on which the commercial banks take loans from the RBI. Now suppose there is a bank, commercial bank PNB, and it is giving home loan to the tune of 10% to a person A. Now it has acquired the loan at a much reduced repo rate, that is 5.4%. So it will also decrease its own rate and make it 9%. I am taking it as an assumption. So what will the person do of the loan? He will spend the money on basically products and services. Now as the person will spend the money on products and services, the demand of products and services will increase in the market. And as the demand increases, the growth will also increase. But there is a major drawback that as the demand increases, the inflation also increases. So the decrease in repo rate means cheaper loans, but it also means that the products and services will be available at a much higher cost. Now let us talk about the hard stance. See what happens in hard stance. In hard stance, the RBI increases its repo rate. So the rate at which the bank will acquire loan from the RBI will be much high, and then it will also increase its own interest rate, and hence the loan will be much higher. So the consumer will not take loan, and hence the products and services would not be purchased, and due to which the inflation will be decreased. So whenever there is a need to decrease the inflation, the RBI increases its repo rate. So why basically is this happening? According to the economic survey, it is said that our economy is consumption based. It means that higher the consumption, higher the growth. Now let us talk about the Council of the Monetary Policy. There are 6 members in its council, and let us suppose that 3 will say that the repo rate will increase, 3 will say that the repo rate will decrease. So the final decision is made by the governor of RBI. Now let us basically understand what will the cheap loan give to the economy. As the loans are cheap, consumers will take more loan and the investors will invest on more industries, due to which there would be an ideal balance between the consumption and the demand. Let us talk about why a person takes loan. A person only takes loans when he has a surety of future. What I basically mean, suppose the person A has a salary of 15,000 and he expects to increase it to 18,000. Then only the person will take loan. See, the consumer or the investor only take loans if they have a surety of future. So, in order to have a balance on the consumption and the demand, the cheaper loans cannot only be the key. So the government must sit with the investors and the general public and devise on new methods to increase or decrease the repo rate. Then only our economy will flourish. So this marks the end of the video. If you have liked watching the video, then please subscribe to the channel and hit the like button.